And speaking of markets, our next guest is keeping a beady eye on some PMIs to see what the Ukraine is doing to sentiment. And to get all of these thoughts and more, let's have a chat with Peter McGuire from XM. Pete, welcome to the program. Always a pleasure. I'd like to kick off with a different question though. Goodness me, the Fed threatening hundreds of basis points of tightening. Equity market says nothing to see here.
No, exactly right, Annette, and hello, David. I tell you what, it was a very strong bid overnight, and what we experienced as far as Nasdaq nearly up 2%. It's been a good day. If I'm looking at the Asia market, Japan's been bid up around about 2.6, 2.7% for the Nikkei. So the overall theme is one of positiveness. It's choppy across Asia. There's some markets that have underperformed, but overall, Annette, I'd say that the mood is relatively strong. So that seems to be the current situation. Who's to say how long that'll last?
Yeah, that's going to be our next question, Pete. How long do you think it will last? Because in the face of what we're talking about, there's a lot of headwinds out there, but for the time being, equities are pushing them aside. Do you expect that's going to last beyond, say, the next week or so?
Well, it might, David. I mean, it might be an uplift. We've had a fairly heavy sell-off over the last couple of months. So there's probably a little bit of good news that's going to come across the markets, and sentiment's going to be relatively stronger, I think, maybe for the US primarily. The other side, you've got those PMIs that are starting to drop. You've got France tomorrow, and then the Euro and the UK. So I'm not expecting anything solid out of them. So that's going to be, I don't think, a real good sign as far as recessionary fears leading into possibly Q3. And the overall theme is one of possible structural weakness as far as what the man and the woman on the street are experiencing with inflation. We've spoken about fuel prices, and here they are at nearly 120 again for Brent. So the overall mood has been very, very strong for energy and some of those other base metal markets.
Yeah, well, speaking of cost of living, I think everyone around the world is trying to get re-elected, and how do we help our voters survive the cost of living? Now, you've highlighted to us that even the European leaders are getting together to see what they can do about cushioning these blows.
Absolutely, and now it's got to be a strategic push down from governments. Either we get to, maybe it's going to be a support to the energy side of things and what impact it has to the consumer globally. So, we've got many nations around the world that give benefits to their end users. Look at India, what it does. Look at some parts of Indonesia. It's not uncommon, so possibly we've got to look at that sort of action here at $2.30, $2.40 a litre. It's fairly bleak, and then you add toll roads to Sydney. It might be better, buying a racehorse and just running across the city that way, I think.
Certainly quicker on occasions, you'd imagine. Pete, let's go into our currencies. I want to get your view on the Japanese yen. It's been absolutely belted. It's got no yield support, and big energy importer as well. So where can the dollar yen get to from here?
David, we've been speaking on that for the last couple of weeks together. It was 114s, 115s. I said keep an eye on 117, maybe 19's got to be the handle to look at. Smash through there. We're through 121 now. So the US dollar index, by the way, we've got that sitting at 98.5. So, the yen, is it going to be a 123, 125 handle? There's every chance of it. I think the overall momentum at the moment is softer and, don't get in the way of a falling knife sort of thing. So the mood out there, everyone's enjoying it. It's been a dynamic market to trade. And if you ever made a dollar out of the yen, then have a close look at it, because I think there's still, big opportunity. And not to say it's going to go down in one line, but I think it's got the potential, David, to take those sort of 125 handle out. Who knows? But it seems to be the momentum at the moment.
Or unless we get a scary risk-off headline, who knows, Peter? And of course, the UK is a busy one this week. I mean, we know the Bank of England's already hiked, but inflation is on a tear. The budget's coming out. What's caught your eye there?
Yeah. Good on Mr. Sunak. I mean, I've got to worry about the PMIs, what's happening as far as the inflation read, the overall sentiment across UK. I think is going to be structural weakness leading forward in the Q3, possibly, mid Q3. They're going to have some problems, again, the same as what the Eurozone will experience. So hold on to the wheel. You got that pound sitting at 132.85. That's been choppy. It's a great market to trade because there's plenty of movement there, and it never short of surprises. So that's a great one as far as volatility. Where we move from here, I'm just keeping a close eye. I want to look at, first off, Annette, what those PMIs represent, where we lead up to Easter as far as the situation with Ukraine and Russia. And if it has legs still after Easter, then this is going to be a very long, protracted, drawn-out situation, and that could well be the case. So very hard to speculate when you've got the possibility of, war times entering the Eurozone. And I'm just here looking at opportunities, realising what we've got across the markets, and take a deep breath, hold on to the wheel, but I think there's a dollar to be made.
Peter, I want to get your view on gold as well, because it's made a run up to those record highs, had a double top, and then all of a sudden we've come back down with a bit of a thud. Where does gold go from here?
David, you know as well as I do, it's highly volatile. We had a 2060 and or 2070, I think was the peak. Might have been out a couple of bucks. Now it's sitting at around 1920. So that hot air has come out of it. Remembering, I think all the smart money has been trading trading yen and trading crude and the energy stocks. So that's where a lot of those big hedge funds looked at. We're still trying to get some identification as far as where the US dollar index sits. You had a rate rise last week. Don't lose sight of that as far as, the Fed. So that took a little bit of the hot air out of gold, but I still think it's got plenty of time yet to shine. And it's a long-term proposition. People are buying physical. They're storing it under the bed. They're doing whatever they can with it because they see that there's a true value in it and it's underpriced. So that seems to be the general consensus across the globe. And I'm pretty sure that will continue certainly in a high inflation time environment.
Are you keeping a beady eye on Bitcoin at all? Because speaking of a risk sentiment indicator.
Yeah, certainly, Annette. I mean, you keep an eye as far as price. It's never short of surprises, and it's whipsaws. It's dynamic. Traders love it, and I talk to different people on chats and across the globe, and no one doesn't like trading it because they always see movement, and movement is what a trader's after. They don't necessarily want to look at, buying option strategies and they're trading between tight bands. That's not on their forecast or their radar. These people want movement, and Bitcoin certainly demonstrates that, Annette. So I think that will just continue due to the current, first off, situation, Russia, Ukraine. Secondly, where the Fed goes. Thirdly, PMIs and the inflation data. So that's all going to add to the attraction to the Bitcoin price.